I recently did a video on SPYI and why it's one of my main funds that I invest in for monthly income. So today we're going to complement it by discussing why I invest in QQQI and why you might want to add it to your portfolio as well. QQQI is the Nasdaq's 100 high income ETF. There's a lot of confusion about this ETF, why it can pay such high monthly income. So we'll cover how the yield is generated, the real edge, and where it fits along SPYI. Stick around to the end of the video and you'll know exactly what the hype is all about and why you might want to add this fund to your portfolio as well. But before we get started, welcome back to the channel where we discuss how to grow our portfolios for the ultimate portfolio payday. Just remember, I'm some random dude from the internet, so always make sure to do your own due diligence before you invest any of your hard-earned money into the markets. Remember, what we talk about here may work for my portfolio, but it might not work for yours. So let's get started. QQQI is an actively managed ETF that owns Nasdaq 100 stocks. Think the tech stocks like Microsoft, Apple, Nvidia, Amazon, Meta, and it basically layers an options overlay on top to target high monthly distributions. As of July 31st, 2025, QQQI shows a 14.56 distribution rate and a 0.68 expense ratio. So let's take a look at the principal investment strategy of QQQI. The fund is an actively managed ETF that seeks to achieve its investment objective by investing in a portfolio of stocks that make up the Nasdaq 100 index and a call option strategy that consists of writing sold call options on the Nasdaq 100 index. The fund seeks to generate high monthly income from the premiums earned from the call options as well as the dividends received from the fund's equity holdings. The goal of the option strategy is to generate high monthly income in a tax-efficient manner. The strategy also offers the potential for upside participation when underlying equity index appreciates. The options overlay is built to turn that volatility into cash flow, while the underlying Nasdaq 100 exposure keeps you tied to tech growth over time. So let's take a look at the current stats of QQQI. This is taken directly from the page from Neos Funds for QQQI. The fund started January 30th, 2024 and has a distribution rate of 14.56% as of July 31st, 2025. Just remember, this is a snapshot annualized from the latest monthly payouts. The distributions will definitely vary. The expense ratio is 0.68%. Assets under management are just under $4 billion as of August 15th, 2025. In the investment objective of QQQI, you can see the distribution classification. Recent distributions were estimated as 100% return of capital, which is the good kind of return of capital that defers taxes by reducing a cost basis. Another tax benefit of the fund is the Section 1256 options, which is 60% long-term capital gains, 40% short-term capital gains treatment on gains and losses from the option overlay. If this fund is something that interests you and you're thinking about adding it to your portfolio, definitely check with your tax professional or your CPA to see if it's something that would work for you. So up until this point, you're probably wondering what's the catch. You have a 14.56 distribution yield, great tax benefits, and high monthly income. Well, there's three catches. There's a capped upside, there's high tech concentration and volatility, and tracking versus the total return. These are the three things that I think would be problematic for this ETF. Do the benefits outweigh the cons? The reason why QQQI's distribution rate is typically higher than that of the other index funds is because you're capped on the upside. If the Nasdaq has a monster rally, you're basically capped on all that upside because you're getting the high income return instead. You're basically exchanging that growth for income. So while you're receiving a very juicy dividend yield, you won't get to experience most of that appreciation that the main fund does. Second, the Nasdaq 100 can swing much harder than the SPY. Think SPYI. All that volatility helps the extra option premium, but the downside can be extremely steep. Over a multi-year run, the QQQ has outpaced QQQI when the market trends strongly upward. The flip side is that QQQI pays you steadily along the way. As you can see here in this chart, even with this total return, dividends reinvested, the overall growth of QQQ is still greater. It just goes to show you what missing out on the full upside appreciation can result in. Earlier in this video, I mentioned SPYI, which is the other NEOS fund that many investors have in their portfolios. If you're not familiar with it, think of SPYI and QQQI as sister funds. Same playbook, different index, and as of July 31st, 2025, SPYI shows a 12.05 distribution rate and the same 0.68% expense ratio. This one, though, has slightly more assets under management with 4.81 billion as of August 15th, 2025. The S&P 500's volatility is usually lower than the Nasdaq 100, so SPYI's distribution rate tends to be a little bit lower, but with a more steady ride. QQQI typically pays more, but it can also bounce and fall much deeper. Many investors, including myself, blend both SPYI and QQQI together. This way I can diversify my risk between the SPY and the QQQ, all while keeping monthly cash flow coming in. These two funds are part of my main focus with dividend investing. So where does QQQI fit into your portfolio? You basically can look at it in three ways. Income-focused accounts, think tax or tax advantage, whether it's in an IRA or just your taxable brokerage account, where monthly paychecks matter. Total return investors who want tech exposure but systematic income. Or diversifiers like myself who pair it with SPYI. So just remember, the distribution rate that I've talked about here isn't a guaranteed yield. These will fluctuate depending on which way the market trends. Market conditions influence both distributions and price. So the bottom line is this. QQQI turns the volatility of the Nasdaq 100 into monthly income with tax efficiency. If you can handle tech's temperament and accept giving up some upside in exchange for high monthly income, it's a very compelling cash flow tool, especially when you pair it with another ETF like SPYI for balance. Thanks for joining me today. Check out this video right here if you want to learn more about why I invest in SPYI, or check out the link in the description below to my blog where I discuss all things dividend investing. Until the next time, have a good one.